Hey guys, welcome to another Trade Genius podcast. I got my good friend Bob Kudla with me, and today we're going to talk about the economy. We've had a great pump post-election, but under the hood, not so good. So we're going to take a look at a chart, talk about what's in store for this market in this video. Let's dive in.
Trade Genius.
All right, Bob. So I think we've been paring back some of the gains that we've seen from that post-election pump and everything in the markets, crypto-related things. Today there was a lot of volatility in the crypto world, Bitcoin up and down and things like that. A lot of it was there was headline-related moves. There was talk of Trump talking to Coinbase CEO and things like that. So it just seems like there's never any onslaught of crypto-related news in that part of the market. But I think is more concerning is what's going to keep driving this market. I mean, the U.S. economy is consumer-driven, and the consumer has a massive problem.
Yeah, and I think we're going to get the first indication, at least on how the NASDAQ's going to react post-Trump with the NVIDIA earnings, I think Wednesday night. So just so everybody knows, SMCI did find a auditor. So I don't know if that's trying to save NVIDIA here before the earnings. Somebody dug one up from somewhere, and so they're going to do an audit. But that won't be done until after the NVIDIA earnings come out. That's my first tell. The second one is just economic activity just keeps faltering, Phil. And if you bring this chart up, this is kind of like the end state, because people have maxed out their credit, they maxed out their savings, and now they're just basically saying, I'm not going to pay back the credit. And so this is what usually happens. You'll find it ironic. Well, most people are probably in trouble right now are renting. They don't really own their homes. So you're not going to really see it probably in the foreclosure or the delinquency data there, I don't think, like last time. But it'll be interesting to find out if there's any data we can find on delinquencies for rent. What's interesting for me is that my daughter just moved into a new place, a little bit of an upgrade to where she was before. I would say this is, if you look at like low end, mid luxury and luxury, it's kind of like mid luxury. They have a place that's, 1,200, 1,400 square feet, a couple bedrooms, a really nice penthouse story. And they gave them basically almost a month and a half free rent to get them in there. So the headline price looks scary, but it's basically 10%. It wasn't any more than she was paying before, and then she has a nicer facility. So I think we're going to probably start seeing more of that, kind of hide the headline number. But this credit card information is just amazing to me. And you know what? And we have no credit card debt in our household, but also the offers have kind of dried up too, if you notice. I haven't really seen any offers. Usually you get an onslaught,
Right.
of offers. I haven't seen them either. So I think they might be trying to manage their balance sheets going into the end of the year, Phil. Our plan is still the same. We're probably going to get liftoff based on option flows and everything else to the end of the year. And then I think things get jiggy into the inauguration, because the things that Trump's going to do is going to basically, we're worried about nuclear war in Russia. I think people need to worry about nuclear war in Washington, D.C. Even though these changes are probably necessary and they're probably good, and everybody listening to us here probably agree with them, but they have consequences. And I think, we're going to see probably economic contraction due to some of these in 2025, and I think the market follows.
Yeah, I think we have market euphoria. I think we are seeing just basically reinvestment of basically like a rolling reinvestment of the gains from the year-to-date gains. But in reality, the market under the hood will have to come and deal with the economy going forward. So what that means is we're going to have a dislocation between fundamentals and the market. The market is not the economy, right? So the economy is going to start stalling out. I would suspect in Q1 we'll have no excuses at that point. It's going to be very painfully obvious. Then all of these flows that we're enjoying here in Q4 and spill over into the first couple of weeks in January will suddenly go away. And I think we're going to get, whenever you have like a credit event or something like that, the best month for that is March. Statistically, that's the month. So I think that if we do start rolling over, I think things could get actually ugly. Like the first wave of this ugliness could manifest itself toward the end of March there. So that's kind of what I'm looking for. And I think we're going to be down quite a bit from the levels that we end up with here going into the end of the year. So I think it's one of those cases where it's like it's just fun and games and everything's doing well and everyone's 401k and mutual fund statements are all at all-time highs, and then in the span of one quarter, like in the next statement, you're down 20%, and it's going to take a while to recover from that first initial drop, I think well into 2026.
remember the confession will start after Christmas. So, you're going to start seeing, retailers laying off, closing. You'll see more restaurants closing. I'm seeing all kinds of sales now in restaurants. I'm talking about smart casual, where you go in and, they're offering you like a dessert and a full meal for like $13 and where it used to be 18. I don't know how they're skimping on things. I went to PJ's restaurant last week and cheesesteak, it was $16 cheesesteak. So you're expecting a, Jersey Mike's style cheesesteak. And this thing was like the half the size of a donut. So that kind of stuff doesn't pass after a while. People are like, hey, it's not worth going out to eat. So
Right.
I think we're going to see that. And then also the layoffs are going to come hard. When those guys start cleaning up their balance sheets going into the Q1 numbers, Phil, they're going to be laying people off after the holidays once they gauge it. And then you're going to see the unemployment rate pop too. So I'm not bullish at all. People are asking me now, how long can this go? How long can this go? I say 2 months max, and then we're going to teeter totter. We're going to sell most of this back down by May or June.
Yeah, I think if you're a small business, you have to really gird your loins here because I think stagflation is a real risk. I think we're going to see the potential for where you just enter this real malaise period of people can't afford anything, but you can't afford to lower anything because your input costs are stuck, right? And so that's the worst of all worlds. And it takes a little while for that to resolve itself. Eventually, input costs do come down because demand all of a sudden dries up. But there's this lag between demand drying up and input costs coming back down. And if, like we talked about that inflation chart too the other day, right? That kicking back up for months and months and months. So it'll be interesting to see how that plays into all of that as well. So it's going to be a tough road to navigate. I think the Fed's completely painted themselves into a corner and don't have a lot of tools that they have had used in the past, no longer available, at least responsibly anyway. So there's no good outcomes in terms of their usual tricks.
Yeah, and I think they're going to be fighting with Trump too.
Yeah.
And just for people, just so you know, is gird your loins a biblical reference? You can Google it, but a hint, it's the ancient version of a plastic cup. So with that, guys, have a good one. Check us out. We're doing really well with this environment, and you got to make hay while the sun shines. And it's always easier to make money when the market's going up than when the market's going down. And really now it's a matter of how we size it and how we hedge it and how we manage the risk. But going into January through March, it'll be a different story, and we'll have different trading tools and ETFs to trade in that environment. So come trade with us. We'll try to keep you on the right side of things. Thanks, Phil. Catch you guys later.
Trade Genius.